This is a complete game changer if you're going from flipping houses to multifamily. Standard flip, $100,000 purchase price, you're putting 50 into it, you have $10,000 of holding costs, all in about 160. You sell it for 210 and you made $50,000. So every dollar that you put in for the renovation, you made about $1 of profit. Well, you probably made less because you give about 30% to the IRS. So here's what happens in multifamily, and this is why we stopped flipping houses. So our rent delta is $200 for every $2,500 we spend per unit. So over 100 unit property that we purchased at a 6 cap, we're going to be able to raise the rent $200 a month by doing $2,500 of renovations. So after spending $250,000 on renovations, the new income we produce on the property is $240,000 a year of new income just from the $250,000. What happens is we'll take this 200, multiply it by 100 units, multiply it by 12 months to get this 240,000, and then we'll divide this by the rate in which it trades at, that cap rate. So we'll divide this 240,000 by 6%. So divide 240,000 by 0.06, and you'll get this number right here, $4 million. So with $250,000 of renovations, we're able to raise the rent $200 a month, and that gives us $4 million of new value. So each dollar that we invested into renovation equals $16 of return, $16 of new value. Now what we can do is we can refinance at this point and pull out 75 to 80% of this money completely tax-free. Since this is debt, we'd be able to pull out $3 million of this tax-free compared to making $50,000 where you're going to give 30% of that to the IRS and maybe make $35,000. So you've invested $160 to make $35, or over here you invested $250,000 to make $240,000 a year plus the extra $4 million of value. So $1 equals $16 of new value. Well, over here, $1 equals $1 of profit. This is why we no longer flip houses. This is why we've moved into only multifamily and self-storage commercial real estate investing, because we can take advantage of really favorable debt terms as far as the multifamily space goes and be able to pull out this equity tax-free rather than paying taxes on this profit. All while this property produces additional income. This is not current income. This is additional on top of what the property already makes. We're making an extra $240,000 a year by investing $250,000 into the property.